It's great to have you back on the show. You think there's a reason to be optimistic about an IPO comeback?
I'm clearly optimistic over the longer term. There's a very large amount of technology-based innovation to be done. And I think it will disrupt many, many industries, most parts of GDP, to be clear.
What about the overall market environment? The fact that IPOs and SPACs have dried up, the fact that higher interest rates has hurt tech valuation so hard. How is that affecting the longer-term optimistic view that you have, if at all?
Well, it's a buying opportunity if you take the long view for really strong companies, not in every company, but take GitLab, for example, one of our portfolio companies in the DevOps space. It's single-digit penetration into a rapidly growing, very large market, which is key to all future software development. So do I see very large headroom over the next 3-5 years? Absolutely. So it's a buy and hold kind of opportunity for me, at least. Similar thing with something like Affirm, another one of our portfolio companies, which is in the consumer lending business. Buy now, pay later is a small niche of the market they're in. MasterCard and Visa is the real market to go after. So these are exciting opportunities and have multi-year runs. And that's the approach we take. These are portfolio companies that I'm happy to hold for multiple years.
I was just going to ask Vinod about Affirm, because this stock was, what, $170 last year? It's now in the mid-20s. You know the concerns right now. Funding costs are rising as interest rates rise. Never really been tested through a recessionary, higher rate environment. The competition is coming from every angle. Why stay with it?
Why stay with it? Because they have a huge advantage in credit scoring, which is the key to consumer lending. It's a very large market. All of lending, somebody will own. Somebody will be the Google of that business, and Affirm will definitely be able to participate in a big way.
What about fintech overall? Obviously, valuations have been hurt. Affirm is just one name. JP Morgan today made another acquisition of a payments company, and they're trying to compete with some of these names. And I think you're still in Stripe as well. How do you see the competition playing out over the coming years between the big traditional bulge bracket banks like a JPM and then some of the growing newcomers?
We are in Square, we are in Stripe, we are in Affirm. But when have you seen an incumbent clearly dislodge a new player with a modern infrastructure? That doesn't happen very often. So I'd bet against JPM and in favor of an Affirm or a Stripe. I think those are very solid long-term bets, in my view. And you have to take the long view. I'm less concerned with quarter-to-quarter variations or other than downs are good opportunities to buy if one believes in a 5-year picture.
You don't think there'll be a convergence at some point where JP Morgan could acquire one of these big players? You think it's one at the expense of the other?
I'm more interested in the case where one of these things acquires JP Morgan. Yes, I'm only joking, but it does happen. Tesla has the large enough market cap to buy any one of the auto companies when people kept talking about who will acquire Tesla. So I do think this reverse opportunity is a possibility, though these new companies do not want to take on the legacy infrastructure, and hence it's much better for them to grow on their own or acquire small, innovative players rather than back into legacy infrastructure. I think this conference I'm at, crypto is a big theme. The blockchain will innovate fintech services and will disrupt a lot of models. I doubt it's one of the traditional players that'll be the big player in the end in the blockchain space.